We know that at the start of the week, the CBN halted the persistent depreciation of the Naira that we've seen. It increased forex supply by 40%. First of all, run us through some of the major reasons behind the pressure we're seeing on the local currency at the moment.
Good morning. Unlike in the past, where it's been a situation where there was excess demand and the central bank did not have enough to cover this demand, it's a bit different what we've seen early this year. It was more a case of the central bank limiting the amount they're selling to tie in with some major inflows that were coming into the market at that point in time. So we haven't seen excessive demand. It's just a case of a mismatch in terms of the supply and the timing at which the central bank has come in. What had happened was that they did reduce the amount they normally offer from the original 200 to the 100 levels. That's $100 million. And at that time, we saw demand in excess of $100 million. After that, when they saw the demand had sort of accumulated, they increased it to 350, covered everything. Although yesterday we saw another slight depreciation of about 10 kobo, I still don't think there's any cause for alarm at this point in time.
Also to bear in mind are some of the global developments we're seeing in an environment where we've seen the dollar strengthen as well. And the main question out of that is, how much of the depreciation has to do with actual Naira weakness and how much to do with dollar strength?
Well, in our case, there's very little correlation between the exchange rate of the dollar in the global markets. Again, because we all know that the Naira is a managed float in the sense that it's the direction of the currency is largely determined by the central bank and the amounts they supply to the market. And it's not a convertible currency, so it's not fully directed by market forces. So at this point, I wouldn't put too much relation to where the dollar value is at this point. I think it's all largely a case of how much the central bank has put into the market. One key fact is that traditionally, the central bank being the body that accumulates most of the oil inflows have always been the major contributor to FX supply in the country. So for that reason, you'd find that most of the Naira movement relates more to the actions and policies of the central bank rather than market forces.
Looking at the exchange rate, we saw it on Monday falling back to about 148. As I was saying earlier, we've got the unit now trading at 152.50 thereabouts. What's your outlook for the local unit moving forward?
Well, so far this year, on the high side, the highest we've seen is a little bit above 151, and on the low we've seen about 149.50. The central bank has, again this year, as they said last year, have said that one of their key policies will be stability, exchange rate stability. And it isn't a hard rule, the fact that they'd like to have a 3% band, but the market assumes that the central bank would have a 3% band. And in my own opinion, I think they would stay within that band. So the key thing we expect to see for the rest of this year is some form of stability and the exchange rate staying within that 3% band. In between, we might see some spikes, but the central bank, like I had said before, is committed to keeping the currency stable. Now, the other factors we have to always keep in mind is where the oil price is and where the reserves are. The reserves at this point are about $43 billion, and this should cover about 8 months cover. And I think at this point, the central bank remains pretty comfortable that they're happy where the exchange rate is. If we see a significant drop in the oil price, then we could start seeing a change in policy.
On a broader economic scale, we've got Nigeria's economy being expected to grow at 6.4% this year, boosted by rising oil prices. But inflation could also remain in double digits then. What's your outlook on the inflation front?
Well, the general outlook for majority is that we expect inflation to increase. The two key points everybody raises is the fact that we're yet to see a deregulation of oil, that's finished product in Nigeria, and another thing that we need to bear in mind is that there's going to be, we have an expansionary budget this year, and there's going to be a lot of government spending. In fact, as we speak, we haven't seen full implementation of 2009 budget, which we expect will happen. There's a supplementary budget that also needs to happen besides the 2010 budget that would also be spent. Again, it's traditional that in a year of election, we'd see there's significant government spending. Now, because of these factors, we expect that there might be an increase in inflation probably in the next few months. But again, we also have to bear in mind that at the end of March, we would see the central bank MPR meeting would happen, and they might tackle the inflation. Now, the question would be, how would they tackle that increase? Would it be by mopping up liquidity, which would be a bit contrary to their objective of increasing credit to the private sector and reducing interest rates? Or would it be by adjusting the exchange rate? That is a big question that nobody is yet to answer.